The next session is on real-world assets. We have Marco from impactMarket and Tomer from Flori Ventures, and the panel will be moderated by Isha from the Celo Foundation. The panel is titled Bringing ReFi Mainstream to Real-World Assets. Can we please welcome our panelists and moderator on stage, please?
Hi, everyone. Thank you for being here. Super excited about this panel. I think it's one of those things that is like, the RWA summer is here, and we're trying to kind of reframe that. And I have like two of the most incredible people I know from the ecosystem here with me. So I'd love for you to give you a big shout out to Tomer and Marco. Do you guys want to introduce yourself quickly?
Hi, everybody. Pleasure to be here. I think it's my third time in this specific Celo Connect. My name is Tomer. Today I'm a GP at Flori Ventures. Flori Ventures is a VC investing in the intersection of blockchain and emerging markets to see how can bring the technology to actually help the people in need all around the world. Before that, I was a co-founder of Good Dollar, and you can see some of the people around here, which is a universal basic income token. Yeah, that's generally me.
All right. I'm Marco Barbosa. I'm Portuguese. I've been in the Celo ecosystem, I think, from the beginning. Actually, one of the first apps being deployed on Celo. Basically, the name of the protocol is impactMarket. We started as a UBI, or unconditional basic income protocol. Then we expanded to also provide microcredit. And we work in some of the most vulnerable communities in developing countries, places like refugee camps in Ghana, women in Afghanistan, Brazilian favelas. So the places where access to finance is almost inexistent, and also there is a lot of vulnerability.
Thank you. And very quickly, I'm Isha. I head DeFi at Celo Foundation, which I think is the most incredible job in the world. And yeah, so just kind of like, before we get into like how we reimagine financial systems, I'd love to learn from you what you both think is wrong with the financial systems and the financial infrastructure right now, especially as it relates to a lot of the emerging markets, because we know some of this works in developed world, like it works in Europe, it works in the US, but a lot of the work that we do, a lot of the work that you guys do is in emerging markets. I'd love to like get your thoughts around like what is broken and why.
Sure. Well, where should I start? There's so many things. So I think one of the biggest challenge and one of the biggest blockers for human development and potential is actually access to finance. So there are a lot of blockers or, let's say, rules or wrong things about current financial systems. So for example, if you think about Venezuela, it's very hard to access, for example, dollars, or even if they get or have like actually money that is valuable, because money ultimately is a medium of exchange, but it should also store some value. If you think about believers, it's like even if people can have access to a bank account and have access to money, that money can be actually controlled, for example, by the government by issuing more and devaluing like the buying power of their citizens. But for example, if we go to other places, let's say Uganda, Zimbabwe, Afghanistan, or other places, like actually access to finance, people cannot even create a bank account, and probably they don't even have an ID. They are refugees coming from other country, and they don't have any kind of documentation. And that kind of blocks the access to financial system. But then, even if they have access to financial system, then how much are the fees? How much is worth the money that they have? How much money they can access to if they transact, like, let's say, remittances or to other countries? How long does it take? Do I need a Western Union place nearby me? Do I have to take that paper money together with me to somewhere else? How many middlemen and how much do we have to pay to a centralized, let's say, entity like a bank that has employees to actually just to make a transfer? So there are like a bunch of, let's say, blockers, and also lack of transparency and a lot of middlemen. And I'm just saying about transacting a unit that ultimately money is a number on a database. That's it. It's a medium of exchange for goods and services. Now, if we think about accessing credit, like that's another like layer of issue, like problems. If you need to access credit, you need a bank account to have a bank account. Maybe you need assets to use a collateral. You need a history. Probably you need a job to have a recurring income. So that's another layer of issues that are not exactly directly correlated with how the financial infrastructure is put in place, but like is how the rules of that financial system were kind of designed by a bunch of people on a building that decided that should work like that. So yeah, that's more or less how I see all the issues.
Obviously, I agree with everything you said. And just to add to it, I think one of the main problems we have today is the way we define value. In the economical system as it is today, the definition is value is something that you can collateralize. If collateralizing means I can take something from you that you will be very sad to lose, therefore you will stand to your commitment for whatever commitment you made for me. Money is generated by debt, by banks. You go to a bank, you're giving them your house as a collateral, and he's issuing new money to you because of this asset that is considered valuable. Now, if a rhino, a white rhino or a black rhino, I don't know which one is the rare one in Africa, dies tomorrow morning, well, we will all be sad. But the fact that we are sad doesn't mean that this asset has a value in the existing financial system. And that's where the definition is starting to become problematic. There is what's valuable for us as humans and what is the financial system capable of identifying as valuable. The money that is generated today is generated by the premises of what can be considered valuable in the existing financial system. New economical systems can redefine what can be collateralized, what can be defined as valuable, and how. That's generally the bottom line.
I love that. I agree with what both of you have said. But I'm going to pull from what you just said. What is the unit of value? And so the whole thesis around real-world asset is that we are tokenizing what is the unit of value in the real world and bringing that on chain, or natively tokenizing that, right? And so based on just like what I have read so far, a lot of it is around real estate, et cetera, right? Tamar, I want to know from you, because you've talked about like what can we collateralize to get loans. What do you think should be like the new definition of real world assets now?
So in order to, you talked about the two ways of doing real world assets on chain. So for the sake of the example, let's take the differences between USDC and DAI, just because it's easy and everybody knows it here. USDC is taking dollars, a real world asset, putting it in a bank account and issuing one token for every $1 they have in the account. DAI, on the other hand, is an over-collateralized asset. It's a native asset to the blockchain that is doing exactly the same utility as USDC, but is native to the blockchain. The first wave that we saw of real-world assets was the USDC use case. How do we take a real-world asset? We take an invoice, we take an apartment, we take whatever, and we lock it, and in escrow, someone will own it, and we will replicate it on-chain in order to give it the characteristics of a blockchain system. The second system is turning real-world assets to become natively on-chain, and I think that's what's exciting about what you guys are doing. Let's take credit score for the sake of the example. Credit score is something that is a real-world asset, right? I care about my credit score. People work hard not to hurt their credit score. And we can take those credit scores and just write them on-chain, which is nice, but I don't think it's as interesting as generating a new native real-world assets on-chain, the same as the credit score that impactMarket are doing on-chain. The reason for it to be exciting is the fact that as long as the asset has to be held in escrow. You will always be holding the risks that are correlated with the real world asset. We saw it with USDC and the collapse of, what was it, the name of the bank? No, the name of the bank. Silicon Valley Bank. That the day that Silicon Valley Bank was closed, we saw USDC depegging just because of this relationship. And that's a risk that we are incapable of measuring because of the black box that is the escrow. The native assets allow us to unveil this black box. And that's why that is the side of real world assets I'm more excited about.
Yeah,
Can I add
yeah,
something?
absolutely.
All right. I think there are here three terms that I'm feeling. I think that blockchain brought a new way of defining them. First, what is value? What is value for me? What is value for other person? I think this is key to understand that probably a bank or an institution can say that your house or your piece of land has value or not, but maybe my trees in my backyard that are, producing oxygen has value as well, but probably no one will pay for it. So ultimately, value is what is this is the perception of someone, and that's required for the medium of exchange. As long as I and the other person with who I'm doing an exchange, we have a unit of account that both understand and value that unit of account, so we can trade goods or services. So the new definition of value kind of changes because ultimately the way I see what is like how we define the value for money is basically the infrastructure where that database that tracks the transactions, how strong and how trustable is that database ultimately. So if I trust a bank to hold my, or some guys that run a bank to hold my money, ultimately is my trust and reputation of that bank that holds somehow, or that government that holds that value. The other thing is like, let's define real world assets. because we talk a lot in our communities that they receive a kind of a conditional basic income in Celo dollars. And sometimes people ask, okay, how do they swap it or cash it out for real money? Your real money or paper money? Or like define real. Is the believers in Venezuela more real than a Celo dollar on a decentralized exchange or in a decentralized infrastructure? What is actually real here? I understand that it's physical somehow, right? But
It doesn't have to be.
No, I think
we get
it's-
to define it now.
It's also the liquidity all the way to your plate that is matters. How does this thing turns into a tomato? If this thing, whatever it is, digital, a JPG, overpriced like monkey, can turn somehow to a tomato, it's real. Like liquidity is what turns something to real.
I don't think I agree with that.
Okay.
I have a problem with JPEGs, but that's just that's a personal
That's a
problem.
personal thing,
That's
yeah.
a personal
We will talk
thing.
about it in person
That's,
later.
That's a personal thing. But I also want to know, like, what are some of the assets that you think that are not on chain that can and should be on chain actually? Like, what are some of the things that you guys are seeing? Like credit scoring, for sure. When I moved from the UK to the US, I had 0 credit score. I couldn't open a bank account because I had 0 credit score. I was in my 30s. Well paid at some point and 0 credit score, so I'm all for like on-chain credit scores. But what are some of the other assets that you guys are seeing that are like interesting, that are like starting to come on chain, and then other assets that you'd guys like to see to come on chain, especially when we're talking about emerging markets? I want to make sure that like we're talking about like not commercial real estate in the US, but like what are you seeing in emerging markets?
yeah, so the other definition is like, I think more than credit scoring is reputation. And blockchain is amazing to measure reputation. Reputation ultimately is, and we kind of, our kind of credit score, we don't call it credit score, but it's a way for us to measure reputation, because UBI is a great way to see how people transact with each other as merchants come on board. So the more transactions you send and receive with different people, based also on your volume, also kind of builds a reputation or the network of trust. And that can also correlate with a kind of a collateral. So my reputation and the people that knows me or vouch for me is kind of my collateral. For example, in our macro credit, I think it's still in very early days, but in the application process, people can vouch for each other, but they can also submit their documentation if they want to start a business or expand the business. They can submit their documentation or financial statements. Those financial statements or future invoices or even ID or the voucher of other people, plus like all the connectivity or how many tokens they have from impactMarket, for example. And all of that can build a kind of a reputation. We are not sure yet how do we put like the documentation about the business, tokenize it on chain, and then using it as a potential collateral because we don't have a way to actually liquidate that. But it's more like a commitment from the person to say, here's, so I'm not sure if we should call it collateral. I had this discussion several times during these days, but anyway, it's something to prove that there is in a repository that is trustable, transparent, that is auditable, that I have an asset or I have something that is value, at least for me or people around me, that can be used to facilitate access to credit, for example. But I would say reputation versus credit scoring.
Yeah, and reputational-based lending has been around for centuries, right? That's how
like
people
saving
used to...
circles or credit
or
credit
SACCOs
circles.
or Rostras,
Exactly.
however you talk about it, that's been around for years, and it's been a big medium of economic growth for centuries. So, I mean, we're honestly reverting to what is existing, like what has existed in the past. How about you, Tamar? What do you think?
So the other thing that I think must come on chain and will come on chain very quickly is all the very valuable PDFs. Apparently, there's way more valuable PDFs that we can imagine when you could generate an invoice. An invoice is a funny thing, right? Because it's a future of a promise money that is somehow exists only on this weird PDF. It's something that if your bank is willing to recognize the invoice that the company sent you, you can sometimes maybe collateralize it if the banks agree to it. That's one type of very valuable PDF, which is invoices. The other part would be all the notes that we use when we export stuff. When a farmer in Mexico is exporting to, I don't know, Nigeria, now, wheat, for the sake of the example, there will be maybe 5 very valuable PDFs generated on the way. There's a PDF that the wheat is actually now in the warehouse. There's a PDF that now the wheat is on the boat. Each one of them is very valuable because it can be, even today, if it's big enough, be collateralized and can be sold on the secondary market. Now, as long as those very expensive PDFs are not on-chain, the utility that you can do with that is actually very inefficient. It's done and dealt with in closed markets and WhatsApp groups. Very similar to the same thing is happening with, let's take carbon credit certificates. Carbon credit certificates are very valuable PDFs that are now moving on chain, and we hear about a lot in the ReFi space. So expensive PDFs are my second
from text to PDF.
my
Back to
next thing
PDF.
to the.
Yeah. Do you want to...
I want to add to what you were saying, actually, because it's, especially when we're talking about ReFi, it's more than just creating alternatives to what exists in the space as we play in right now, currently. When we're thinking of Web3 in the ReFi space, when we're talking about those sort of invoices and such, it'd be super valuable to stamp on something like fair trade. Because if we're thinking about creating things for people and planet, that's what's important, right? Like, it's not just about bringing more assets onto chain and creating these stamps that exist. Like, that's just like a plethora of more information you don't necessarily need. So, like, I'm curious, like, is there a highlight there? Like, what's the purpose behind that? Because
Yes.
supply chain is something that already exists in our world as it is, right?
Yes. So, few things about it. There is the access to financial tools that the fact that it's on chain can give you, And then there is what sunlight, how can sunlight do very well to those type of industries. And when I say sunlight, is the transparency. When all the information of an asset would be on chain, when you buy tuna, let's take it, it's easier. If you've seen the movie Seaspiracy, it's a nice movie to talk about those supply chains. And you have on those tuna, you have those stamps of sustainable fishing. And this sustainable fishing is a PDF that they get. Now, bringing it on chain is not just bringing the PDF on chain. It's bringing all the supply chain of the proof of what they're trying to claim into to come on chain. Where did you actually fish the fish that you did? Where did you actually transfer it to? Bring all that information to the sunlight, and the sunlight by itself will do a lot of good. People will stop buying stuff once they can look at the information of it. So that's my take. The transparency will become the catalyst that we're looking for in order to bring that change.
Yeah, because that's the thing, like ReFi can't just be another buzzword that exists, right? Like you have to be able to like do a little bit more, and the purpose behind that is that transparency, like to show people that as consumers we can make better choices.
Yep, basically.
I also just want to very quickly add a PDF that Coca-Cola has provided some kind of shipment, and when Coca-Cola goes to the bank, and the rates of capital that Coca-Cola gets on the line of credit, as opposed to like a small manufacturer in Kenya, Nigeria, Venezuela, gets on the same dollar value of invoice is very, very different. And so bringing these little PDFs on chain helps us kind of build out a system of standardization where Coca-Cola and the small manufacturer may not get exactly the same rates of capital, but I'm hoping that we can bridge that gap to something that is not equal but closer. That's my hope.
Definitely. The difference between 80% interest rate to
Correct.
like 5.
Or 15. I'm okay with like
Oh,
15.
15,
yeah.
but 80 is not
Yeah.
reasonable.
Just to share an example of something that we have been kind of looking into to put all these pieces together. So there are a lot of farmers that we support with the UBI, and we are starting now also to provide microcredit. But one thing now that there is like the carbon credits coming on chain, there should be like a very simple way to, okay, this is my piece of land. As long as I keep these kind of trees sequestrating, carbon or producing oxygen, there is a value on that, right? And there is someone that will pay for the good that my trees are doing, and eventually I can get an income to preserve those trees in my backyard. So let's say an income that is directly correlated with the value that I'm producing. So this is kind of an idea of like, I can get an income just by helping the world. It's like I think it's a very simple, cool example of what ReFi could actually mean for a lot of these communities.
I would like to make to elaborate more on the point that Isha made about, the interest rate that Coca-Cola get from the bank versus the farmers on the same invoice. The fundamental thing here is asset backed. So it's an invoice that you're lending to, not Coca-Cola. So if you were to lend to Coca-Cola because of their history, because of their credit rating, it's always going to be low interest rate, right? But if you were to lend to a farmers in Kenya who do not have a lot of credit information, then of course you have to substitute that with a higher interest rate. That is normal capital market.
Definitely.
But if you actually can bring this asset of the invoice on chain, because it's the same invoice, and you lend to it, then fundamentally you have bridged the gap between these two interest rates that charge to two different borrowers, but on the same transaction.
Yeah, 100%.
100% agree with that. So now we've talked about like a lot of the RWAs and what we want to bring on chain, a lot of inventory financing, trade financing, etc. What is like, there's lots of friction, I know, but what are like 2 or 3 key areas of friction and challenges that you guys foresee in the next 2 to 3 years that we need to kind of go over to kind of get over the hump?
So The type of markets that we talk about, a huge trillions of dollars market financed by very old institutions. And one of our main problems is that those institutions are making business based on brands. They are buying, if we're talking a lot about carbon credits, they're basically buying only their carbon credits, for the sake of the example. They are willing to give loans only through the debt funds, and those debt funds are only willing to give loans directly to companies that have been lending at least $500 million a year so far. So we have a problem of bridging real money, like huge real money, into the new solutions, even in times when those solutions are way superior over the existing real-world solutions. So this is one of our hardest things to do. How do we bridge the big money into the new, better solutions in a reasonable time frame?
I kind of cheated on this answer, and I just had a nice conversation with ChatGPT before this, and I asked all these questions. So maybe I can go just what are kind of the biggest challenges to actually build real-world assets into on-chain. So, sorry. But I kind of agree with all of this. So there is like the regulatory environment, right? So different countries, different kind of perception on different assets, how to securitize or how to use them as collateral. There is no kind of a standard yet. Like, okay, how can I can tokenize my house and have more owners of that house, but someone else will tokenize the house. There is no standard, right? Anyone does is kind of a far west, a wild west. Also, security and trust. I think that here, like blockchain, kind of solves it. Scalability and performance. The two, then, like I think what one of the biggest challenges, like what we were talking before about valuation and pricing. But I think that it will be much easier to find it if it's on chain, because ultimately it's the blockchain is a coordination peer network. So finding a value of something, having that infrastructure that is independent and trustable and auditable, it's easier to find the pricing, because ultimately, like, it's what the consensus or who bids more, that is easier to find the pricing of something than currently how everything happens. And ultimately, it's like education, like exactly, okay, how do I tokenize like my trees, like, right? Who owns these trees? Like, is this piece of land real mine? Who certifies that? Should I trust who certifies this? You know, like, then there is all these questions, but that's how I would approach the challenges.
I think I agree with both of you.
You agree with
ChatGPT, apparently.
I mean, like, Tomer and ChatGPT at this point. I think there is, for this to become a real thing, we do require like large quantums of capital, usually institutional capital. I do agree, like, regulation plays a really big part of like that institutional capital coming on chain. But I think it's like bigger. I think it's also a little bit of awareness. And I know, Tomer, you and I talked about this slightly earlier today, where like yields that are generated in like some of the more like debt products in emerging markets are actually a lot higher by not 1 or 2 basis points, but like a large delta, as opposed to like yields generated in the developed world. And I think
small businesses in Colombia take today loans at 80% yearly. Like.
Yeah. I remember working in Kenya, and I was giving out loans at like 10% per month. That becomes 160% a year. Like, that's what people in Kenya used to take loans at. And so, like, these are
insane. Fundraising from you after you made so much money.
No, is what I work for. I think there's somebody who wants to say something.
Hi, well, thank you for your explanation. My name is Simon, and I would like to know
Yes. We. Yes, we provide UBI in Venezuela and starting microcredits very soon. The thing about Venezuela is of a country, so credits, if that's everything on chain, should be okay. But we provide UBI like to, I think, 5,000 people in Venezuela in dollars. So what they see in believers, and like it's an amazing savings account because their value in believers is every day is going up. And there is a high demand for dollars. But we'd love to, yes, to talk with you, how can we expand in Venezuela? Because it's one of the most challenging markets that actually need DeFi.
So I know we're almost at time. My last question to you both. How can RWAs help us achieve shared prosperity? And I know we talked about this a little bit, but I'd love to get like final thoughts.
So I can follow up on that idea of how can I preserve clean water or having piece of land with trees that is generating goods can be verifiable, maybe through oracles and satellites that can see those trees and can easily mathematically see how much carbon dioxide and oxygen actually is producing, put a value on that, and having people receiving or a token that can be used as a medium of exchange or just some stable coin correlated with the good they are doing. Usually, I like to look at things on blockchain and also following the idea of Celo or the mission of Celo, that is the 3 Ps, right? The people, planet, and prosperity. And I think those 3 things can be combined, and if there is something that can be more valuable that maybe is not so easy measurable or difficult to measure, is actually like the nature that we have and the planet that we have that has tremendous value. And the more we look at the universe and we see our consciousness and the uniqueness of probably, having life is such a rare, valuable thing, and it's impressive how there is no clear way to value that or to extract value that. And I hope that we are in the path to like value real world assets or nature-backed assets, and having that as a gateway to drive access to finance and inclusivity and prosperity. So hopefully it fits all together. At least in theory, it fits beautifully together. So, and I think we have the technology needed to give the power to the people to actually build those infrastructure and ecosystems.
I have a question to the audience about that. Who here is an investor in the military industry? No? No investors in the military industry? There's one, so kidding, but it's in a second. Yeah, so who else is investing here in the oil industry? No? Who is investing in the gambling industry? Who has a pension fund that is investing in S&P 500? Like, come on, there's more hands than let's assume half of the people here. Most of us are invested in industries that we have no idea what they're doing on a daily basis, and actually a big portion of our money is going not to where we actually chose. A lot of it is related to the transparency problem that we talked about a second ago, and the lack of access to assets that are unavailable to us. Carbon credits is one of the examples that we talk about here a lot, but also it could be ethical credit solutions. It could be multiple other solutions that we can invest our money in that we believe in way more, that we just don't have the access to, don't have the transparency to use, don't have the access to. And I think one of the ways of creating prosperity for all is actually generating the access to invest in new type of assets class that are more aligned with our values as people investors. That's that.
I love that. I think that's like the way forward. I really like that. Thank you both. Do we have questions?
Yeah.
I just wanted to add, actually, because one thing that would lead to prosperity is empowered participation. ReFi is heavily highlighted on circular economics, donut economics, indigenomics. I have a loud voice anyway, indigenomics. So, like, when we're thinking about those models, it's super important to think of that number one thing, participation. And what that's going to look like is we can have all of the projects out there that are super amazing, but they're going to be far detached from most of the people because people won't understand why is it important to them. So we need to be able to show people like things like we all have a common good and a common shared asset like planet Earth. You know, I'm from Vancouver, so our old growth trees, they're huge in how important they are to us in building, you know, being a part of our communities and such. But I find that there's a lot of projects in the ReFi space that are continuing to come up with, you know, same things that we've seen before, like with DeFi, and they're not really like anchoring in people actually understanding why it's important. They have no idea what ReFi is. They don't understand what the terms are. The onboarding process for a lot of these projects are really hard for people to understand. So I think like being able to like bridge that would be super important for individuals because the average person's not gonna understand why this would be more important for them or be able to tap into like loans or whatever it might be other than going to their traditional banks. So I think that's something that you guys had missed talking about, but that's like a huge thing.
Totally agree. There's a talk I do called permissionless entrepreneurship. And for me, the state of mind started the first time I connected my computer to become a miner in the Bitcoin system. I love the vision of Bitcoin. I love this fact that we're building a new financial system. This moment of participation that I turned my computer into a miner. It wasn't profitable, if anyone is asking. But I turned my computer into a miner. That was amazing. I owned part of it. I was helping it. I was earning money while doing that. Everything I could ever dreamed of from participation perspective was so much fun. And so I agree with you. It's crucial. How do we allow like this permissionless participation system to like emerge? It's super crucial, and I agree.
And your cap tables matter and who's sitting on them too, on a lot of these projects, because you'll see the big players come in and take over, you know, because it's the next buzz thing coming up and they want to be a part of it. And we just end up making the same mistakes again. So I mean, for myself, like I've just in the past year been exploring the ReFi space and beginning to understand a lot of these projects. But what I'm seeing is like this individual from, you know, a huge blockchain project that has perhaps like, you know, a system that's not necessarily helping us has moved over here and now they're participating here, you know, and like that doesn't make me always feel great because I'm like, how are they not bringing this? How can we ensure that they're not going to make the same mistakes that they've done over here, now here?
Yeah, so are we at time? I completely agree. That's why we provide is a decentralized way to provide unconditional basic income in Celo dollars, so in stablecoin in dollars, in almost 30 developing countries now, 50,000 people in refugee camps, Brazilian favelas, and in this case, is not even an option for them. There is nothing else there. They don't have bank accounts, sometimes don't even have an ID. This is the only way. And giving a little bit of that, it's an amazing incentive to create participation. And after that, they ask for a microcredit because now they feel that they can start a small business there. And it's good for everyone. If you give a little bit of money to a lot of people in the same community, it changes dynamics. And we don't even talk about blockchain. Here's an app. Those are digital dollars. You know those words there? As long as you save them, not even the government can take money away from you. And you don't even ID to transfer this money. That is dollars, that is better than your paper thing that you have. They understand that. They are poor, they are not dumb. And we don't, in the same way we talk about go to the internet or go to this website, we don't talk about TCP IP, we don't talk about the protocol or technology. It's just like, it's easy. Here's dollars. They understand dollars. There is a high demand for dollars in these countries. So that's how we do our part on participation because there is no other option left. And then the younger generation drives a lot of curiosity. How this works? And then they even ask for microcredits to buy a computer to start developing in Solidity like a new saving circles for their friends. And like, this is great. We just give like a little bit of this new money to them and they figure it out. We even have people that are blind using it, right? Blind people transferring Celo dollars using blockchain. But we never said blockchain or crypto words. They figure it out after.
Yeah, we don't talk about the cloud as a technology anymore.
Exactly.
But a lot of our
Exactly.
That's the point. We'd like to see it move that way because a lot of people aren't interested in like the depths of the tech and the protocols and the such that we do as builders, right?
That's too much.
Okay, I'm gonna really quickly just like comment on what you said. I think there's two types of capital participation. There's retail capital participation and institutional capital participation, right? For retail capital participation, I need to be, these kind of yield opportunities need to be at financial institution level. For instance, in the US, a Fidelity has to be able to offer me access to these kind of opportunities. And these opportunities are actually really high yield generating. And so they're better returns for a retail investor as opposed to the returns in T-bills. But a Fidelity has to recognize that these are relatively risk-safe asset classes. And I think there's a long way for us to go in terms of like awareness and like bringing those kind of behemoth players into this space. I think people like Tomer and Marco are doing a really good job, but we need like more participation just generally from the ecosystem.
Let me add just another detail. On top of participation, there is a new amazing thing that usually we don't talk about, is ownership. One of the things that it allows, for example, all this, what we've built is operated by a DAO. There is the governance tokens, and so, for example, every time someone repays their microloan in time, they earn ownership of the protocol. It's the same way, for example, if imagine that in a bank you repay your debts and you get shares of that bank. Now imagine like how this changes behaviors, because we are in a community, we hold part of this bank. The more credits, the more people repay, the more it grows, the more people we bring, the more we help each other, the more the value of this bank that is owned by the users. Just, you know, like, and then this is another level of participation, is actually giving ownership to the participants, the users of this decentralized infrastructure. If we as a company cease to exist, the DAO and the infrastructure keeps using is one of the problems with fintechs. Right? So, okay, I use Venmo. If it fails tomorrow, what happens to me, right? So I just wanted to share that the ownership part of it is really important as well. It's more than participation. It's empowerment.
Yeah, I know we're really over, so I want to thank you all for chatting with me about all things that are interesting to me. And thank you all for your participation.